All right. In this video, I will be exposing the clues trader overlook every day whenever they open their chart to trade. All right, everyone, this is Ageless. I will first establish some things before we go into the chart, okay? Stay with me, and after this video, you should be taking trades with confidence because you would have known a whole lot. I mean, a whole lot, and that will actually build your what, your confidence in trading. Now let's go. Let's first of all establish that truth first. Now, you remember some time now I'll be explaining some certain things to you about what fair value gap. All right. Now this is a fair value gap. If you don't know it before now, this is a fair value gap. This is a bullish fair value gap, right? Now this is also what, why this is what, a bearish fair value gap. Okay, now I want you to what, first of all understand that institutions such as your what, your hedge funds, your banks, your central banks, what they do is that they work on the higher time frames. Okay, they work on the higher time frame. They place their large orders and move the market on the higher time frames. So you as a retail trader, you need to what, also follow in their what, in their footsteps. Okay, because these are what, these are the people that move the market. These are the people that what, that push price to wherever destination they want to push price to. Okay, so now if you want to move with them, you have to go to the higher time frame to what, to carry out your analysis, which is very important. So what are the higher time frames? These are for the monthly time frame, the weekly time frame, the daily, and what, your 4 hour time frame. Okay, now how do you carry out analysis? So when you open your chart, you first of all go straight to the monthly time frame. Okay, now when you get to the monthly time frame, you look for a fair value gap, because fair value gap is their footprint. Okay, is their footprint. If they want to move the market and you notice a bullish fair value gap on the higher time frame, especially the monthly or probably the weekly and daily or 4 hour, then it tells you that what, these smart money traders, they want to what, it is time for them to move. They want to move price upward. Okay, now but if it is a bearish fair value gap, okay, such as this, so it tells you that these smart money traders, they want to start what, going bearish, because your fair value gap will give you the direction at where they are what, trading towards. Okay, so that is that. Go up to the what, the monthly time frame, the weekly, daily, and 4 hour to look for fair value gap, because that fair value gap will tell you the direction where they are what, where they are heading. Okay, and you also need to what, trade in line with them. You need to trade along with them as they are moving. You also what, you as a retail trader, you need to what, move, because the moment they pump money into the market and it is time for them to move, okay, they move the market significantly. That is what you need to know. They move the market significantly. Like, that is why there is what, there is a trendy condition in the market. Okay, please, the trend is your friend. Okay, now who are these people that move market? Who are these people that form this trend? These are the what, the institution that we are talking about. They don't go to the lower time frame to place their trades, so they go to the higher time frame to what, to move the price. So when they move the price and you notice that they have left a footprint, which is your first value gap, then what you need to do, you wait for price to what, retrace back into the fair value gap on that same time frame. Okay, let's assume this is what, this is weekly fair value gap. You found a fair value gap on the weekly time frame, right? So the moment you wait on that weekly time frame, if price retrace back into the fair value gap, that is when you can now go down to the lower time frames for your entry, so that you can move along or in line with this what, smart money traders. Okay, now this is a weekly what, fair value gap, right? You go down to what, 2 time frames below, which is your daily and your what, on your 4 hours. So when you get to your 4 hour, after price has entered this fair value gap, So when you get to your 4 hour, when you switch your time frame to 4 hour, then you wait for a 4 hour fair value gap out because they are moving the market upward. They are buying. So therefore, you will wait for what? A 4 hour bullish fair value gap. The moment 4 hour bullish fair value gap has been created, that is an opportunity for you to what? To ride the market with these smart money traders. Or probably you can go what? Three time frame below, which is what? Your 1 hour. So when you what when 1 hour fair value gaps are formed, let's say like two or three, that is when you should enter and you ride the market with them. So the same thing also applies to what? To your bearish fair value gap. You wait for price to retrace back into the what? Fair value gap. Then the moment price enters into the fair value gap, then you now go down time frames to look for your what? Entry. And once you have succeeded in entry, then you will move in line with what? With these smart money traders. Okay, now that is just that about that. Now just take a look at this. Like I've explained earlier, these smart money traders, when they want to move the market, there is something they usually leave behind, which is what? Their footprint. So that footprint is a sign that okay, they are moving the market upward. So now this is a clue. They have given you a clue that oh, they want to move. So now you are smart also too. So therefore, you will move in line with them. Okay. Now, one thing about smart money traders is that they usually have targets. If they start to move the market right now, they know where they will terminate. They know what they are where they are heading towards, what they are targeting. Okay. Now, therefore, you as a retail trader, you should also know their intention. You should also know their intention. When you enter, you should also know what they are heading towards, what they are targeting. Okay, so that is that about that. So similarly, that it is the same scenario to what? To the bearish condition. All right, now let's continue in our what? In the analysis before I push you into what? Into the chart and I explain everything to you in detail. Just stay with me and you will understand it. Now, this is a fair value gap. And every fair value gap is expected to create a new fair value gap as soon as possible. Okay. Now, if a fair value gap is created and price taps into the fair value gap, because fair value gap is a magnet, and when it magnetizes price towards itself, it is also a rocket. It pushes price away. As it pushes price away, it is expected that what? This fair value gap should create a new fair value gap. Then after this new fair value gap is created and it pushes price upward, a new fair value gap what should be created. Okay, because when the creation of a fair value gap is telling you a story, what story is it telling you? It's telling you that what? Price is what? Is trending. The market is trending. Okay. So when, because the fair value gaps are the leg that price uses to what? To move from one destination to the other or to the next destination. But if after this fair value gap has been created and price decided not to push up to create a new fair value gap, so the non-creation of a fair value gap is also telling you a story. What is it telling you? It's also telling you that price wants to reverse because price is not interested in pushing upward. It's not interested in moving. It's not interested in moving to the next what? To the next destination or towards the target. Okay, you understand that now, right? So that is that about that. Let's look at this. This was the first fair value gap that was created, and when price tapped into it, it pushes price away and it created what happened? It created a new fair value gap. And we are also expecting that price will come back into this fair value gap and push up. And when it push up, and this fair value gap should create a new fair value gap too until what? It will keep going until it gets to what? To the target, the smart money target. Okay, now let's take a look at it. So as it's creating fair value gap upward, is moving towards the target. Okay, it's moving towards the target. The target could be a swing what? A swing point. It could be an old high or whatever, or probably the next what? PD array. We have created a fair value gap here. This fair value gap created a new fair value gap, and this fair value gap created another leg, which is a new fair value gap. Okay, that should push what? Price what? To the next. So as fair value gaps are being created, trend is being formed. Can you see? They say trend is your friend. You have to trade with the trend. Can you see? This is trend. In a trendy market, that is when you will make a lot of money. That's when you make huge amounts of money in forex trading. So always trade with your with what? With the trend. Now let's move into the what? Into the chart. I will be reviewing some certain things to you now. Trust me, you will understand this. Forex trading is easy. You need to understand the language of price. And the moment you understand the language of price, like what price wants to do and where price is heading, all of this together, you will what? You will be highly profitable. Now let's take a look at this chart. As you can see, this is weekly time frame, right? Now where is the price? Now this is the price, so it has been trending down, right? As you can see, it has been trending down. So this is where the price is right now, and on this price now, it has created a new what? Fair value gap, a bearish fair value gap. So on this weekly time frame, our intention is to continue to what? To trade downward, since we have seen that what? The big boys or the big guys, they have what? They are moving price downward, and they left a clue, they left a footprint, okay? They left a signal for you, okay? So you have noticed this, so you will enter off of this what? Fair value gap, okay? Let's mark it out because we want to trade it downward. Now this is the fair value gap. If you didn't see it properly then, so I think you'll be seeing it now. It's clear and visible. This is the fair value gap because we have been trading. These smart money traders, they have been trading downward. They have been pushing price towards a particular destination. And when they got to this place, a new footprint was printed. So it's an opportunity for you to what? To gain access into what? Into this market and write it down. Now let's see if and eventually this is what we are actually expecting. We are waiting for price to go back into the fair value gap, because fair value gap is a magnet, and when price gets into it, it pushes price away. I believe you understand that. Okay, now let's see, and eventually, wow, can you see? And we are actually expecting price to just come into this fair value gap, tap into it. Then this fair value gap, as strong as it should be, it should have what? Pushed price away. Then it will be trending downward. But look at it. What happened was that we now have a bullish what? A bullish expansion candle that will disrespected this fair value gap. So after the close of this bullish expansion candle, it shows that what? This fair value gap, this bearish fair value gap is a weak fair value gap. Now this bullish expansion candle is also telling us something. Something is about to happen. That is why you need to what? Pay attention to the story that the price is telling you. Okay, now because we are actually expecting this bearish fair value gap to push price away, but as it is now, it's not looking like it's going to what? Push it away. So you wait to see what will happen. Okay, now let's take a look at it. And eventually another what? Another consolidation candle was formed. Okay, and when it formed, it created a bullish fair value gap. Wow. So this bullish fair value gap now has disrespected the bearish fair value gap that actually we intended to trade off of. So now let's mark it out and see eventually what happened. Now as you can see, the bullish fair value gap. So as this bullish fair value gap is created, it shows that this bearish fair value gap is a weak fair value gap. And what is this telling you again? What is this market telling you? It's telling you that all this while, the smart money trader, the big boys, all right, that have been moving the market downward, they have changed direction. Now you as a smart trader, you also need to what? You also need to change your direction and move what? In line, as they are about to what? To start moving what? The price upward, because they have changed direction, because we now have what? A bullish fair value gap in the market. So the the direction has changed. Now that the direction has changed, now you also need to what? Change your direction. All right, you also need to change your direction and trade smartly. Now let's look at it. This is now a weak fair value gap because it's no longer useful. We actually intended to trade off of it downward, but what happened was that It now created what? A bullish what? Fair value gap. This is a strong fair value gap. This fair value gap is so strong. If you watch my last video, you will see that I actually explained this concept to you. Okay, now one thing about smart money traders is that whenever they switch direction and they want to start trading upward or probably downward, they usually have targets. As I've explained earlier, they usually have targets. They know where they are trading towards. They actually know where they are heading, and they know where they want to what, they want to change direction. Okay, I believe you understand that. So these are the things that you need to know as a trader. When you know all of this, can you see this is a weekly fair value gap? Now we as a retail trader, we want to trade off of it. Now what will you do? You wait for price to come back into this weekly fair value gap. As price comes into the weekly fair value gap, you go down to what? To the lower time frame for your entry condition. So once you are able to enter, then you ride the market with the what? With the big guys. Okay, now this is what you should be expecting. Okay, now how far can the price go? Because these smart money traders, they know how far the price will go. Okay, they know where they want to terminate. Is it that as they are moving this price upward now, when price gets a price will reverse, or probably when price gets a price will change direction? Now this is now another clue I also want to watch. I also want to show you, I want you to pay attention. And once again, if you've not subscribed to this channel, please endeavor to do that, because the next video that is going to be released is going to be so massive. Now let's continue. Now look at it. We want to move, right, with what? With the big boys, right? But we don't know where they are heading, and we don't know where they will change direction, right? But you should know, you understand, you should understand the language of price. If you look at it, if you look at this price condition, you will discover that we do not have fair value gap along this path except here, right? And fair value gap, just like I've explained to you, fair value gaps are what? They are magnets, and when price comes into them, they will what? They will reject price. And I've told my student in the mentorship class that I taught them high resistance liquidity run and low resistance liquidity run. Like this one now is low resistance because there is no obstacles on the way. There is no fair value gap on the way. All the fair value gaps that are that were formed as we were coming down have been traded back into, they have been mitigated. This fair value gap here is no longer useful because price has entered into it and it has rejected price. So the only one that has not rejected price is this one here. So this is the only obstacle on our way. So look at it. So if price wants to keep going now, there is going to be a what? Free movement. There's going to be free movement until it gets to what? To this fair value gap. Can you see the smart money traders? Can you see where they are heading now? They are heading towards this swing point, or probably this old high. Now let me point it out to you. Can you see that is an old high over there? As you can see it, I have what? I have traced it out. This is an old high. They are what? Chasing this old high. And don't forget, this is weekly time frame. Now if you are a swing trader and you know where they are heading, if you enter off of this what, off of this movement, you understand, just place your trade and place your stop loss, and um just leave everything, and price will definitely get to what? To the swing point, because you already know where they are heading. This is what? Liquidity point. Swing highs, swing low, or probably old highs, old lows. They are what? Liquidity point. Now on swing high, money resides there. There is a whole lot of money here. So these smart money traders, they are trading towards money. They are running towards money. They are chasing after money. They want to go and pick money. So that is one thing that you should need, that you need to know. Now, in the quest of going towards trading towards this money, do we have obstacles on the way? No. The only obstacles that we have is probably this swing point here, and probably, and also what? This fair value gap. Now, is this fair value gap sufficient enough to reverse the direction of the market? I will definitely tell you that no, it is not sufficient enough to reverse the direction of the market. So as price is going, when it gets to this fair value gap, I will tell you what will happen. Okay, now let's continue. Now look at it. This is the fair value gap. I've mapped it out for you to see it properly. Okay, now that you know that, okay, the price the smart money traders, they want to what? They want to go bullish, and you have established that. Now, where are they heading towards? You already know that too, because you have seen that, okay, this is where this is a swing, an old high. Okay, they are trading towards old high, and you have also established that on your way through trading towards what? The old high, we do not have obstacles except this fair value gap that we what? That could reject price, right? So you will now have the confidence to place your trade and just forget about it, because believing that it will get toward to this high. All right, now let's see what we are intending to do. Now, as price will continue to move, when it gets to this fair value gap, this fair value gap has the capacity to reject price. It has the capacity to push price away, because I have established it that fair value gap is a magnet. When it magnetizes price towards itself, it is also a rocket. It pushes price away. But trust me, this fair value gap is not sufficient enough to what? To change the direction of the market downward. It can only push price down a bit. Then price will now what? Continue upward. I'm going to establish that in a moment. Okay, now let's continue. Now, this is what is going to happen. As this price was going, it was what? It will print a new what? Weekly fair value gap along the way, because I've established it that what? Fair value gap, when a fair value gap is created, it is expected that that fair value gap should create a new fair value gap instantly. Okay, now as this price we enter into this fair value gap, now the fair value gap, that bullish fair value gap that was created along the way, this fair value gap will push price back into the bullish fair value gap. Then this bullish fair value gap will now push price upward. Can you see it? So when price is going heading towards a fair value gap that is far away, so that fair value gap that is far away is never sufficient enough to change the direction of price, because along the way a new fair value gap would have been created, that when this one reject price, it will reject price into the what? The new bullish fair value gap that was created. Then this new bullish fair value gap will now have what? Will now push price through, because this one now would have been mitigated, it would have been used up. Okay, so this will now be the strong fair value gap that will push price through to what? To the swing point, or probably the old high. Now let's see how all of this eventually play out. Now that it has been established that price will get to the swing high, you know that price will get to the swing high, that this obstacle on the way is not sufficient enough to push price down, right? So now let's see. You can now what? Confidently place your what? Your trade. If you are a swing trader, you place your trade here on the what? On the fair value gap. As price comes into the fair value gap, it taps you in. And don't forget to place your what? Your stop loss below the swing low. Okay. Then you target 1 to 2, or probably the what? The swing high. So as a swing trader, because you have established that price is definitely going to get to the swing high, right? So you just place all your parameters, then you just go and sleep. You need to gain confidence in your strategy. All right, but if you are a retail trader, right, you should be trading just in line as fair value gaps are being created. Okay, now I'm going to be showing you that now. Now look at this. As you have entered, can you see price came into the fair value gap, right, and pushed up? As it pushed up, right, now you would have what? Targeted your 1:2 here, and you would have gone out of the market. So as price pushed up again, it created a new fair value gap. This is an opportunity for you to enter this off of this fair value gap again. Now let me map it out. Can you see? So another word, entry opportunity. You wait for price to retrace back into the fair value gap. As price retraces back into the fair value gap, you go to the lower time frame for your entry. So as you are able to enter, you ride the market with the smart money trader into what? Into this fair value gap, because you would have targeted another 1:2, right? So now let's see what happened. Now let's take a look at this now. As price retraced back into the fair value gap, it pushed up. Now look at it. It pushed up on a full body into this fair value gap. Okay, but what happened? This fair value gap rejected price. That is why we have this pin bar, pin candle. Okay, this candle is actually entered into this fair value gap on a full body, but as it got into the what, the fair value gap, the fair value gap rejected it, you understand, downward. Okay, but now when it rejected it downward, what happened? It rejected it into the what, the fair value gap that was created along the way. Can you see that? Price tapped into this fair value gap. Then what will now happen? This fair value gap will now push price up through this fair value gap. Then it will continue. Now let's look at it. Can you see it? Price eventually came into this fair value gap and then pushed up, okay, on an expansion candle. As you can see, that has been established. That is how to what, to trade. After you have entered off of this now and you've made your what, your profit, you wait for a new fair value gap to be created. While someone who has entered the trade on a swing, as a swing trader, you will not bother entry off of a fair value gap, okay, because your trade will definitely run to the target. Okay, now let's take a look at what eventually happened again. Can you see along the line too, after it has broken through this fair value gap that has been mitigated, it created a new fair value gap. This fair value gap pushed up and created a new fair value gap. This is an opportunity for you to what, to take an entry again. Let me map it out. Now when you map it out, can you see it? This is the top fair value gap. Now you wait for price to come into the fair value gap, then it will push up. Then as price comes into this fair value gap, now it's an opportunity for you to enter again. And funny enough, this is a good trade to take because it's overlapping with this swing. Okay, so definitely as you enter, you ride it, you take your 1:2. Your 1:2 is more than enough to make you super rich. Okay, now as you ride that, now your third trade, now look at what happened. And it eventually pushed through the what, the swing high, and it closes above the swing high. This is what liquidity run. It runs the what, the swing high. But in the process of running the swing high, it created a new fair value gap again. You could have still entered off of that fair value gap. Let me map it out for you to see it. Now can you see? This is the fourth fair value gap, all right? So now you wait for price to retrace back into the fair value gap for you to take an entry, and you target your what, 1:2 again. Now look at it, and eventually it tapped into the fair value gap. You would have entered this trade, and it created another what, expansion candle, a big expansion candle, and took out this swing high, right? Now you have taken 4 trades or probably 5 trades. Now let's continue. Oh, can you imagine? After it has taken out this high, look at what happened. Now price actually range after taking out this high, because I've established that in some of my videos that when price take out the high, there's tendency that what, price reward will reverse. Okay, now we are actually expecting this big white candle to create another bullish fair value gap, but look at what happened. A bearish fair value gap came into the what, into the market, which shows that what, the smart money trader, they have changed direction. Okay, can you see, they have changed direction. So now this now is a strong bearish fair value gap. So therefore you have to what, change direction, and you start trading downwards too, because smart money trader, they have come into this um they have changed their direction, their movement. Okay, now let's see what eventually happened. Can you see? Price tapped into the fair value gap and came down, and it went up again, and it was rallying and moving, and so you are actually expected to what, to ride this market downward, maybe probably toward to this swing low too. So that is how to trade. That is how to what, to be smart. So, okay, now smart money trader, they place their order on a higher time frame. You have to what, take your analysis. You have to do your analysis on the higher time frames. Okay, when you do your analysis on the higher time frame, then you will be in the right market with the smart money traders. All right, if you've not subscribed to this YouTube, endeavor to subscribe to the YouTube now. Press the notification button because a new video is coming forth soon. And this video, this is going to blow your mind. You understand? Get ready. My next YouTube video is dropping soon and is going to be massive. All right, thank you.